Hey guys, it's Mrs. Invest. So, are we headed towards a recession in Canada? In my last video, I talked about the stock market correction that's currently happening, but in this video, I want to talk about a possible upcoming recession, what that means for our investment portfolio, and tips I have for you to how to deal with your investment portfolio during a recession. So, a recession is when you have 2 quarters consistently, one after the other, of negative economic decline, or the economy is declining quarter after quarter for 2 consecutive quarters. And while we aren't there yet, economists in Canada are increasingly predicting the likelihood of a possible recession because of out of control inflation, which was about 6.5% most recently this March, and the aggressive interest rate hikes that are going to be coming over the next year or so to deal with the out of control inflation. While we aren't there yet, are we in a correction? Most definitely. The stock market is down quite a lot from our recent highs in November, and although this can be temporarily quite painful, it's important to remember that this is the same old story that has always been. You know, the last 3 years, 2019, 2020, and 2021, we had really good returns in the stock market. The S&P did really well, the US total market did really well, the Canadian total market and TSX did really well for 3 years in a row, and the stock market overall cannot go up 25% or 20% year after year after year without some kind of pullback. So it's really not unexpected for us to be experiencing a pullback year, especially when we've just had 3 really good years, one after the other. And when you have these types of corrections, these are really good opportunities, unless you're retiring in the next little while, to build up your positions at a discount. And over the long term, these are probably going to be the best buys that you are able to buy compared to all the prices you were able to buy in at of the stocks that you own. And of course, nobody can make predictions in the short-term future, but if I had to guess on the major indices, meaning the TSX, the S&P, the US total market, I would expect us for 2022 to be ending flat on the year. In other words, no returns or even negative. I would be really surprised to see us have any positive return, maybe over like 2 or 3% for the year. Again, just because we've had 3 preceding really strong years, and after those really strong years, one after another in a row, we do tend to see a pullback in the market in a following year. With that said, here are some of my tips for investing during a downturn, a correction, a recession, whatever you want to call it. And I will share what I've been buying during this downturn, but I'm not going to tell you when it is, so you'll just have to keep watching. Okay, tip number 1 is keep investing monthly into the markets as you've always been doing. Now is not the time to be afraid to invest. If anything, if there was ever a time to be afraid to put your money in the market, it should be at all-time highs, which ironically is when everyone is looking at getting into the market. It's so backwards, but you know, I guess it's psychology. These are your best opportunities for entry prices, as I said, probably at any point, especially at the end of a major correction. Of course, you can never time the bottom, but we're well into it, and we are seeing some significant discounts right now. What does that mean? That means if you buy a good quality growth stock, you are going to see some significant return on your capital compared to had you bought that growth stock outside of the correction during its normal sort of price range that it trades at. And for a dividend stock, that means that you will get a greater yield on cost from day one, meaning that however much money you put into the stock, you are going to be receiving more dividend for that money due to the depressed share price. So long story short, these are the best opportunities, some of the best opportunities during these corrections to get into the market and to add to your positions. So don't let the fear of uncertainty prevent you from investing during the best possible times that you can, which are during the downturns. Tip number 2 is to focus on investing in company stock where the stock has been excessively beaten down without much deterioration to the company's core business despite the poor economic conditions. So what does that mean? That means companies that are still executing, still doing what they said they're going to do despite the more difficult economic times, and companies that are producing good net profit, good free cash flow, and good returns in terms of earnings per share to their investors, but their share price has just been beaten down along with the rest of the market. So you have a company that's still doing well and doing everything it says it's going to do, but the share price has kind of just gone down with everything else, as opposed to a company that is really not doing well due to the correction and their share price is down as well. And so there are kind of two categories of these types of good companies that are executing, but the share price is beaten down, that I find during corrections. Typically, it's at least in Canada, it is your high quality dividend paying stocks that are often related to like the core of the Canadian economy and consumer staples. So like an example of this would be the Canadian banks. They're doing very well, just fine. They're having great quarters, but their share prices are kind of down with everything else. And category number two would be high quality growth companies who are, again, still executing, still have demand for their products or whatever their company services that they're providing. Their share price is kind of depressed along with the rest of the market despite continuing to execute in harder economic times. So those are kind of the mismatches that you want to try to identify, because that's really where the big value is. Tip number 3 is flashing lights. Do not invest using borrowed funds or margin. Margin can wipe you out worse than your first time trying to snowboard. Seriously, this can get you absolutely killed. Don't do it, especially in a down market. What that means is don't use borrowed funds to invest. So don't take money to put into the market that you have to pay interest on that money for borrowing, or in the case of margin, where you have the possibility of having your shares called away from you to fulfill maintenance requirements during a downturn. This can absolutely wreck you and wipe you out in ways that you have never seen. And stop losses, don't use them either, especially in down markets where you can have extreme volatility day to day. Stop losses are for traders, not for long-term investing. And one of the most common emails I get, actually surprisingly, by the way, guys, I love your emails, and it's not any investing advice. It's more just, I like to interact with you, and in the YouTube comments too, or an email. But I guess people kind of feel more comfortable sending me personal questions over email rather than like publicly in YouTube. But again, I always tell you guys on email, nothing is investing advice. It's more just like talking stock, because I love talking about this with other people. But anyways, sidetrack. One of the most common questions I get is, hey, Mrs. Invest, should I buy Tesla stock on margin? And I'm like, no, don't do it ever. And ironically, or I guess it's not ironic, it's expected, people tend to ask me this question when Tesla stock is doing really, really well. I remember one specific email I got where somebody was asking me around the times Tesla was trading at like 1,000, maybe it was at like October, it was like a bit before November, or maybe it was December, anyways, around the fall, early winter. And they were like, I have an opportunity here to invest invest on margin and buy Tesla stock at 6% margin interest. And I was like, and they were like, well, Tesla stock's going to do better than 6%. So like, isn't this like a no-brainer? And I'm like, absolutely not. Because first of all, Tesla stock's doing really well right now, but it's a super volatile asset. Like, look where we are now from our recent high at 1,200. I think we're at barely holding on in the 700s. And, I hopefully this person did not buy the stock on margin, because if they did, what has happened is they've probably bought in around 1,000. The stock dropped significantly to where we are now. They've been margin called, had to sell all those stocks at a loss to pay back their margin loan, and they're totally wiped out. Never mind the financial aspect of it, but the stress, the not ability to sleep, it's just not worth it unless you are like super experienced and know what you're doing. And I'll put it on the record, I will never invest in margin using margin. I'm just like, I am not interested in that level of stress. No, thank you. And especially for beginners, just stay away from it. You can wipe yourself out really quickly, and it's It's painful. Okay, tip number 4 is to avoid speculative investments during downturns. This, in my opinion, is like a lot of crypto. And I know that's controversial, but it's just my opinion. I don't hold any crypto. And also maybe companies that are a little bit questionable, or maybe they're good companies. Maybe they have the potential to be a great company. They're just kind of early and young. They've got a lot of debt. They're not really earning a lot of free cash flow. So their balance sheet's a little bit rocky. These are the types of assets that during downturns investors flee from, meaning that they sell and the share price goes down a lot quickly, because in hard economic times, investors tend to gravitate towards more those stable type of companies, consumer staples, utilities, things that we know are going to stick around and don't have a risk of going bankrupt. And so if you're investing in anything a little bit speculative that may have been propped up during more optimistic economic times, you may see that those investments get hit really hard. And the good ones will come back, but those companies that were kind of artificially propped up despite having maybe a poor business model, lots of debt, poor balance sheet, those ones may not recover, and you kind of may end up holding the bag on those. So it's probably not the best time to start with speculative assets during a correction or a downturn. And in my opinion, this is probably one of the reasons that ARK Invest's funds have kind of taken a really big hit this year. And it's because a lot of the companies that are owned in those funds are, I don't want to say speculative, but they have really interesting long-term potential. But as of today, a lot of them are sort of in their infancy, and the technology hasn't really been adopted yet, and they're very sort of futuristic. And so during a downturn, they're a little bit riskier to investors. I really think a lot of the stocks in those funds are fantastic, and there might be some really big winners in the stocks that she owns, that Kathy owns in the ARK funds. But as of right now, during shaky economic times, I'm not surprised to see them be temporarily quite beaten down just because of the nature of the assets that are held in those funds. And 5th is a lifestyle thing, but it is to keep your monthly expenses low and reduce your cost of living. So during a market downturn, it's probably not the best idea to start taking out loans on a lot of things that you can't afford, like fancy cars. Just in the event that things get really bad and you lose your job, you want to be able to have some cash reserves in your emergency fund to protect you in the event of a serious downturn, which probably won't happen, but it's always good to be defensive and plan ahead so that you don't end up in a pickle. And finally, as I promised, I'll share the things that I've been buying during this correction. So honestly, this is like, everyone's always so curious, but I feel like it's very lackluster, the things that I buy, like it's some like mythical thing, but it's honestly very simple. I've been adding a lot to my US indices, so that's VFV and VUN. I just like Vanguard funds. I've been adding a lot of Canadian banks, Royal Bank most recently, because I just love Royal and I don't have as much of it as some of the other banks. So I've added quite a bit of Royal, and of course Tesla stock. I bought a few shares there, but I'm only able to buy a little bit every month. I don't have like a huge cash reserve, so those are really the 3 things I've been buying. I haven't really been buying anything new. I've just been kind of adding to my positions of the stocks that I know and love and adding to them at a great price. So I'd love to know what you guys have been buying and what your opinions are of whether we're headed for a recession or not. I look forward to reading your comments, and I'll see you in the next video. Bye.